My guest today is Lou Mendelsohn, and he is a pioneer in trading with computers. And we're here to talk to him today about his background and his experience over the years. So Lou, talk about your background. Start telling us from the very beginning when you first got interested in this industry.
When I was in graduate school in 1971, I began trading stocks and options. I had always been interested in the financial markets for some reason, even as a kid, but in 71 I began trading stocks and options. And of course, back then at that time, all I had available to me was graph paper, a number 2 pencil, a ruler, and that was it. And so everything was done by hand with charts, and technical analysis was really just a very laborious task at that point. In the mid-70s, when I was in an MBA program, I acquired my first Hewlett-Packard calculator, handheld calculator. And so that kind of took me to the next level, and we were able to start computing technical indicators with a calculator instead of having to use pen and paper to do so. And then a couple of years later, while I was a hospital administrator, I began shifting from stocks and options over to commodities trading because of the tremendous leverage that was involved in commodities at the time. And that was just coincidentally simultaneously when personal computers were just becoming available. They had just been invented and coming onto the market.
Did you teach yourself how to program, or what did you do?
Started to familiarize myself with basic programming language, which was pretty much what was out there at the time. And I started to write software programs that would calculate a number of the technical indicators that I had been computing by hand previously, and started to just familiarize myself with what some of the capabilities of the PC were and how I might be able to apply it to technical analysis.
Did you instantly see the possibilities of the computer and financial markets, or did it take some time to get there?
It took me about 1 second to see that. What happened was in 1977, while I was a hospital administrator down in South Florida, I read an article in the Wall Street Journal about PCs, and that evening I went over to Radio Shack on the way home, and went in and saw the PCs that were there and kind of started fiddling around with them. And I just remember it. When I walked out of that store, I had the feeling the world has just changed. This is really going to revolutionize life as we know it. And I could immediately see that it would be something that could be applied tremendously to the field of technical analysis. And I wanted to be part of that.
It must have been hard to go to work the next day at the hospital.
It was. It really was. Monday mornings were often difficult because we would have executive meetings of the top staff of the hospital, and I was trading gold at the time, and it was a distraction, so to speak, in that regard. And it ultimately led to me having to make a very significant life decision that my wife and I discussed in detail and we agonized over. And I decided at that time, we just had a newborn son. I decided that I was going to leave hospital administration and go into software development and pursue my interest in trading.
So when you did quit your job as a hospital administrator, what was the reaction from family, friends?
My wife was very supportive. She really believed in me, and she put her heart and soul into the decision with me to leave hospital administration. Her dad, on the other hand, my father-in-law, he really just could not fathom how I could possibly leave being a hospital administrator, which of course was a very prestigious, stable type of a career to have, and from his perspective, go off and program computers in my bedroom and sell software to people, to other traders, because almost no one had computers. So it's like, how are you going to sell software? There are no computers.
So what was the first thing you tried to do then with the computer? What was the first kind of programs you wrote? What were they trying to do?
Well, at first I wrote programs to automate some of the technical indicators that I had been calculating with handheld calculator. But then when I really
decided to really apply the technology in a serious manner and think about doing it from a commercial standpoint in terms of developing software for my own trading, but using it and myself, and at the same time licensing it to other traders to help defray my expenses of doing the R&D, I had to look at it from a much broader standpoint in terms of what really do traders need? How can this computer be used to the maximum ability of what its technical capabilities are? And I chose a top-down approach. I had had some prior experience with mainframe computers. I have a degree from Carnegie Mellon University from the Tepper School of Business. And so I did have work with mainframes back in the 60s. Of course, it was with teletype machines and key punch machines, but I still it was not a foreign concept to me to understand what a computer's capabilities could in fact be. And I made a decision that I did not want to just simply use it as a, so to speak, a automated, sped up handheld calculator, which is what I had started off doing with the developing of the programs to do the technical studies. I instead looked at it from the standpoint of how can I take the capabilities that I knew were being done on a mainframe by the wirehouses, like Merrill Lynch in particular at the time was very big. They had a very substantial commodity research division that was headed by a fellow named Frank Hockheimer. And he had done a lot of work on back testing on mainframes and optimizing technical indicators. And so basically, I decided to try to implement on a personal computer what I already knew had been getting done on mainframe computers.
You must have run into some roadblocks though, right? Because personal computers are pretty...
Very primitive at the time.
Right.
Yeah. In fact, in the very beginning, of course, I was using PCs that had no hard disk. They hadn't even yet become incorporated into computers. So I had external hard disks. My first external hard disk was a 5 megabyte hard disk, which by today's standards is like, I think the dumbest smartphone has more than 5 megabytes of memory. It was very difficult. I did run into a lot of roadblocks, but I'm a kind of a compulsive perfectionist in a way, and I just barreled through it and just worked through the challenges, worked through the roadblocks, and I was determined to develop strategy backtesting capabilities on a personal computer at the time, and I did.
And at that time, were you thinking that this software would be for other traders like yourself, or did you think it would be institutions, big banks, that sort of thing?
No, because I was an individual trader myself, and I was in communications with other traders. After I had written articles in Futures Magazine in '83, a lot of traders from all over the world began to reach out to me and to communicate with me because they read what I was writing about, and it was very interesting to other traders. So I already had created kind of an informal network with traders around the world that were involved in the commodities markets. And so I definitely decided that the focus that I was going to have was going to be on individual traders like myself. What do individual traders need? What kind of a tool could really give them a competitive advantage over everybody else that either wasn't even using any software at the time because they didn't even have computers, or if they were using software that was very primitive and all it really did was calculate numbers that previously had been getting done on handheld calculators. So
this was the early days of Profit Taker. Did you know this was Profit Taker as it was starting, or was that later?
Profit Taker as it was starting, yes. We're talking 1983 area, and Profit Taker did come out in 1983, but I had already had numerous prior versions of Profit Taker in earlier years that I myself was using, but I wasn't satisfied with it in terms of it being a commercially marketable product at the time.
What did Profit Taker do?
Profit Taker did strategy backtesting. And as well, it had a daily update side to the software. There were kind of like two sides to the software. One that did the daily updates so that you would know what to do each day in terms of trading. And the other side was the backtesting side, which allowed you to optimize Profit Taker's logic which encompassed a number of different technical indicators that were all connected to one another, and be able to do that on a commodity-specific basis so that for each commodity, the model was tailor-fitted to that particular commodity. A number of things that I did within Profit Taker, particularly on the history testing side, which again goes back to the challenge of how to do it on a PC when in fact it was previously only being done on mainframes, was, for instance, rollover testing. I wanted the software to be as useful and as realistic as a commodities trader knew it should be. Well, that means that you have expiring contracts. How do you deal with expiring contracts? When do you do a rollover? Do you do a rollover if you're in a long position on the expiring contract? Do you immediately roll into the next one? Or do you have the history tester go back and see if on the next contract out it would have been in a long position? All these little nuances that most of my clients, at the time would never even have thought about themselves, but these were the kinds of issues that I dealt with. Lock limit conditions. Lock limit is very important because if it's lock limit, you can't execute a trade in or out. Well, if your history tester doesn't have the capacity to assess whether a lock limit condition exists or not, then it could potentially give buy signals or sell signals at times when under real-time conditions you never could have made the trade. Well, then the test results would be completely invalidated under those conditions. So I had to deal with a lot of little details that were unique nuances to commodity markets and figure out how to best implement those capabilities in the software so that the software could be as realistic as possible in being able to assess the markets. On the daily update side of the software, the interesting part of that was that I had a price projection capability built into it. It didn't just tell you what to do on the next day's open after today's close gets updated. I had another logic block in there that actually was able to find the threshold price for the following day that would trigger a new trading signal on the close of that following day. But I had that information a day earlier because I was forecasting it, and using mathematical formulas, I was able to find that exact threshold price that would cause a new signal. That was the first real time that I myself began to move into the whole thought of forecasting and projecting as opposed to lagging and following. And it was funny because at the time I didn't realize it, but that in fact led years later to a lot of the research that I ended up doing with later software programs that I developed, in which I moved away from lagging indicators and trend following to actually getting into price forecasting and trend forecasting.
Lou, you've been a real pioneer in this. It's been fascinating to hear about the beginning. I'm looking forward to hearing more. Thanks for being here.
Thank you very much.
I've been talking with Lou Mendelsohn, a pioneer in the trading software industry.